झालं मोबाईल परत सुरू. उठलं की मोबाईल, दात घासले की मोबाईल. हसू नको अजिबात. सारखं आपलं मोबाईल. काय झालं?
गोड गोड बोला.
Hey folks, here Rachana Ranade here and I welcome you all to a Makar Sankranti special video wherein we are going to discuss about one sugar stock. But before we start discussing about the sugar stock, let's understand a little bit about our tradition, right? Makar means Capricorn and Makar Sankranti is basically a celebration of movement of sun into Makar Rashi. It's one of the very few Hindu festivals which is aligned with the solar cycle, and that's why it's celebrated on 14th of January every year. From this day, the sun starts its movement towards the northern hemisphere, also known as Uttarayan. Do you remember Pitamaha Bhishma from Mahabharata? Yes. And he had the boon of Ichha Mrityu. He decided to leave his body on this day because of the Hindu belief that one who dies during Uttarayan goes to heaven. And this festival of Makar Sankranti marks the beginning of harvest season where new crops are worshipped and shared with delight. This festival is therefore dedicated to the god of
Sun.
Very good. Celebrated in different names in different regions. In Andhra Pradesh, it is celebrated as Uttarayan. In Karnataka as Suggi Habba. In Assam as Magh Bihu. Lohri and Maghi in Punjab. And in Tamil Nadu as
Pongal.
Nice. So on this day, Ayurveda also suggests that we should be consuming sesame seeds as til, known as til, along with gul, which is jaggery. So that is why we distribute til gul. And what do we say?
गोड गोड बोला.
Til gul घ्या, गोड गोड बोला. Let me remind you all one more time that all these creative people are spammers. That's how my account looks like. Also remember, I never give my mobile number in any chat. I neither have an advisory nor do I give any stock tips. So today the stock that we are going to discuss is Balrampur Chini Ltd, and Chini is nothing but sugar. So this company ideally should be generating revenue from what? From manufacturing and selling of sugar. So before we move on to the exact process, let's understand the three major segments from which the company generates revenue. The very first one is by manufacturing and selling sugar. The second one is by co-generation and the third one is distillery. Now let's understand the process in a little bit detail so that you get to understand what is this co-generation and distillery, right? So if you see, have a look at this chart. The very first thing you can see that, okay, sugar cane is weighed, prepared, whatever. Then you come to the crushing stage. Now here you can see bagasse. I hope I have pronounced it properly. That is coming out as what? As a byproduct. Then you can see it goes into the boilers, some steam and whatnot. So in simple words, through this, power is generated. Okay, now what happens with this power? It is utilized in the factory for captive consumption, right? So whatever power is generated in this process that is used for self-consumption, still some excesses remain and that is sold off to the distribution company, sold off to the grid. Can that also be a revenue generating source? Yes, and that exactly is nothing but co-generation, right? If we move on to the process further, towards the end you can see that process of centrifuging, and here you can see one more byproduct which is molasses, through which alcohol, industrial alcohol is generated, and this is nothing but ethanol. And is the company going to earn by selling ethanol too? Yes. How much is the revenue split between all these three things? Let's quickly understand. If you have a look at this chart now, you can see that from financial year 18 to financial year 21, you can see that revenues in the sugar segment have been growing at a very slow pace. But if you see distillery, that has gone up from 332 crores to 826 crores, growing up by more than almost 2.5 times. But if you check out the profitability now, PBIT figures, you can see that from financial year 18 to financial year 21, their revenue from sugar has gone up almost by 2 times. But if you check the distillery is what? Our ethanol thing. That has gone up from 108 crores to 341 crores. That's a jump of more than 3 times. So all in all, to sum up, what are the 3 major revenue sources for the company? Number 1, manufacture and sale of sugar. Number 2, sale of power. And number 3, sale of ethanol. Now, if you have a look at this chart which we have just referred to, you can very clearly see that the profit from distillery segment, that is by sale of ethanol, that has gone up almost more than 3 times. Now, we must understand what's happening in this industry. Is there a major ethanol shift in this entire sugar industry? That's what we are going to discuss in this section. So 100% attention for next 5 minutes, right? So what was the landmark that happened in this industry? It was the biofuel policy of 2018, which mentioned that if I'm talking about petrol, the target that the government set by 2025, 80% petrol and 20% ethanol should be blended together. Okay, but this is the target by what? 2025. Is there a near term target also? Yes, near term target is 10% blending of ethanol with petrol. Simple. Where are we right now? We are at 8.5% in 2021. So is this very close? Absolutely seems achievable, right? One more thing that the government did very nice was that originally crude oil prices and ethanol prices were linked to each other. And because crude oil prices are very much fluctuating in nature, ethanol prices were also very fluctuating. So government decided to de-link the prices of these products so that to give a better stability to ethanol, right? One more amazing thing that government did was reduction in GST in ethanol from 18% to 5%. Two more things on the finance side. Number 1, they encouraged the banks to give soft loans. What are soft loans? Loans which are offered at a lower interest rate. Okay. And one more thing, they also introduced an interest subvention scheme. So again, what is the logic behind this? Offering interest at a lower rate. Okay. Now, we are saying that, okay, our government is taking so much initiatives. We talked about the biofuel policy and whatnot. But why? What problem is ethanol solving? That is important, right? Why this shift? Why are we doing this? So have a look at this chart, right? So if you see, I want you to focus on that maroon graph, that is closing stock of sugar, right? Now, if you see that the closing stock of sugar was increasing from 2016 to 2019. Now, what is this closing stock? I'll simply tell you. If I say production is 100, domestic consumption is, let's say, 60, exports are another 20. What is balance? Balance is 20. That is your closing stock. Simple. Now, if you see that closing stock has been continuously increasing, is that a good sign? No, absolutely not, right? So government, if you remember, 2018 that policy came in, wherein more and more of ethanol production was encouraged, so that if ethanol production increases, automatically sugar production will be controlled, right? So you can see very clearly from 2019 to 2020 to 21 to 22, the closing stock of sugar is continuously decreasing. Is this going to have a good impact on the sugar prices as well? Yes, for those who are selling sugar, for them, if you can see on the top, the line graph, sugar prices were continuously falling. So for sugar manufacturers, this was not good. At least now you can see a little bit reversal. So sugar manufacturers are also happy. It has added sweetness to their lives, right? Okay, so number 1, what problem this ethanol is solving? Sugar surplus problem is being solved by ethanol. Okay, just for your information, India is the second largest producing nation of sugar. Which is the first one? China? काहीतरी वेगळं असू शकतं ना लाईफमध्ये. It's Brazil. Okay, so one more interesting data point coming up in the immediate next slide. So before that, one more problem that is being solved by ethanol is support to farmers, right? So obviously, if farmers are get more and more ethanol demand, more and more demand will be for even sugarcane, right? So that will have a positive impact for the farmers. Number 3, reduction on crude import, right? Because we are going to blend petrol and ethanol, right? So if our crude oil import reduces, is it going to be a good sign for our trade deficit? Definitely, yes, our trade deficit will keep on decreasing. One more point, reduction in carbon emissions, which will promote clean energy. Now, have a look at this chart. Okay, now what is this about? This is about global ethanol production. Okay, so I did talk about the fact that yes, India is like the second largest sugar producing nation. But what about ethanol production now? So for that, if you see, Brazil is the second largest. Where is India? 5th largest in ethanol production. And so at least we are in top 5. Look at the numbers, na? USA is at 6,080 crore liters, first place, and India is at 190 crore liters at the fifth place. Okay, so can I say there is a large headroom which is still available for us? Can we pep up our production? Which production? Ethanol production. Yes, which is going to solve a lot of problems. मग काय आपण झोपलोय का? नाही. Are we doing some things? Is the production pepping up at least over the period of years? Yes. Have a look at this chart now. If you see from 2013-14 to 2019-20, it has grown not at a fantastic pace, but yes, it has been steadily growing. But now have a look at 1920 to 2021. It has gone up from 195.5 what crore liters to 346.52 crore liters. So this is almost 1.5 times jump in the increased supplies of ethanol, right? This is India. And even if you see the number of distilleries, if you see the capacity to manufacture ethanol, that has also been continuously increasing from 2014-15 to 2019-20. So are we on a good track? Answer is yes. One last point before we wrap up the industry analysis is what is our government's outlook? One more point. What are our ministers speaking about this? Nitin Gadkari ji says that we really wish that the vehicle manufacturers manufacture flex fuel vehicles. Now, what is this flex fuel vehicle? It's something like a flexible vehicle which can run either on 100% petrol or on 100% bioethanol or on a mix of that, on a blend of that. If that is doable, can I say it's going to be a very positive sign for us? Absolutely yes. Even our Prime Minister Narendra Modi ji has said that if we go ahead with this ethanol blending, currently we have already saved more than 4,000 crore rupees in foreign exchange, and this target is to increase the savings by 12,000 crore rupees in the next 4 years. Oh my god, after looking at all these points, I'm sure you might be like, kya baat hai? And if you really like this, just hit that like button. So let's talk more about let's talk more about the company in detail. It was founded in 1975 and it was amongst the first ones to venture into distillery and cogeneration. Remember the 3 points? Companies into sugar, distillery and cogeneration, right? Currently it has a capacity of 76,500 TCD. What's that? Ton canes per day sugar capacity, and it's one of the largest sugar manufacturers in India. It has grown its capacity with a well-planned capacity expansion project and also acquisition of other existing companies. It's among the first ones in the industry to install incinerator boilers. Now, what happens if a company is installing this incinerator boiler in their distillery? Basically, if this is not installed, okay, any distillery is allowed to operate only for 270 days. But if they are installing this, then they are allowed to operate for 330 days, which gives 2 more months in a year for additional capacity of production, right? One more point, that it's currently focused on evolving more from a sugar company into an energy company. So as a first step towards this reality, they are ready to sacrifice 20% of the production of sugar to increase the ethanol production. Okay, so also understand where the company is located, majorly, or I can say in Uttar Pradesh only, where they have 10 manufacturing units in Uttar Pradesh. All are in close proximity of each other. Of course, if you want, you can pause the video and read about the additional details of the company as well. If I'm talking about capex plans for the distillery segment specifically, because as I mentioned, they're focusing more on distillery, ethanol. Currently, they have a capacity of 520 KLPD. What is KLPD? Kiloliters per day of what? Of ethanol we are talking about, right? So existing capacity is of what? 520 KLPD. They are also expanding this by Mirzapur, Balrampur and Gularia expansion. By the way, I'm shooting the video on 6th of January. Aaj this date hai na? 6th of January. 7th hai ka? Okay, 7th. And yesterday, a notification had come up wherein it was mentioned that this Gularia expansion, which was planned, has now actually started its expansion thing, right? So this 40 additional, now what is the total expansion? It's coming up to 1050 KLPD, right? One more recent news, you can again, if you want, you can read it through, but it's in order to supply it's in order to supply 18,000 kiloliters of ethanol to private sector OMC, and the totality of public and private sector OMC's total order is going up to 1,57,100 KLPD. Let's start with the financial details, starting with profit and loss. And here you can see that sales overall has been in an increasing trend. What is the rate at which sales have grown? Not very much. If you see 10 years compounded sales growth is barely 5%, 5 years 12%, 3 years 3%, pretty bad. TTM though is minus 21%. Okay, what about the overall profitability? If you check profit before tax, you can see that it's increasing at least higher than sales. If you look at the percentage growth, compounded profit growth, you can see 10 years 11%, 5 years 36%, even 3 years is decent enough with 28% profit growth. TTM again is at minus 21% growth. Stock price has given good CAGR. If you see 3 years is also 56%, 1 year is 143%. Have a look at return on equity also, pretty much decent. 3 years 23%, 5 years 25%, and last year it has been 19%. Is that it about financials? Nope. Let's go into a little bit detail. Let's go into the product segments now. Now, if you see sugar, all in all, fair enough growth. But if you look at the percentage growth now, let's compare March 21 with March 20. You can see, in fact, there is a degrowth, minus 1% for sugar, but for distillery, it's a 50% growth. Isn't that good? Yes. So distillery is our ethanol thing, right? Now, if I go to PBIT, you can see that for PBIT, it has gone down from 344 crores to 278 crores for sugar, and for distillery, it has increased from 261 crores to 341 crores. How about the percentage margin? For sugar, it's contributing to 6%, so overall 6% margin of the total profitability, but distillery is contributing 41%. How much is the growth? You can see growth for sugar is minus 19%, and for distillery, it is 30%. How about ROCE segment wise? Again, a very interesting data point. For sugar segment, ROCE is 11%, but for distillery, the ROCE percentage is 74%. Is that interesting, right? So if we go on to the balance sheet now, I hope P&L is very much clear. For balance sheet here, you can see that their share capital is continuously dropping from 26 to 24 crores to 23, 22 and 21 crores. Why is this happening? Company is doing buybacks for almost last 5 years, right? Again, something very interesting for borrowings. You can see borrowings has been decreasing. Just see the last 3-4 years data, okay? From 1,734 crores to 1,482 crores to 1,240 crores and to 307 crores in half year ended September 2021, right? So borrowings has drastically reduced. In fact, if you know about this, the dividend payout also has been healthy at 10.9%. So if I go to cash flows now, cash flows, you can see that nothing much interesting, but at least I can say it's positive. Okay, so not so much to be happy about. The last point that I would like to tell you is about the key ratios. ROCE at 16.8%, 16.5%, ROE at 18.8%, debt to equity is very good at just 0.12, current ratio at 4.2, showing very healthy liquidity. PE is at 20.2 versus industry PE of 12.7. So let's start with the risks. The very first one risk is that the entire segment, the entire industry, I can say, is very much exposed to government policies. So just to give you an example, currently Uttar Pradesh was allocated a lower production quota. To be specific, quarter 2 FY21, the production quota was at 43.7%, which was dropped to 36.8% in Q2 of FY22. Simple, lower production will result in lower sale, will result in lower profitability, right? One more point is that there is a cyclicality in sugar production. If that happens, then of course the sugar prices turn out to be more and more volatile, right? One more point is that the entire sugar industry is highly regulated, so because of which how much sugar will be produced, how much will be sold domestically, how much will be exported, a lot of things are decided by the government. One more point is that because sugar is an agri commodity, it is very much dependent on climatic conditions. So even if you have a look at this, you can see that there is a drop in sales of sugar. Why? This is mainly because of the vulnerability of pests and diseases, which had an impact on sales in the immediate previous year, right? One more last point is that high dependency on a single crop, which can affect the yields and recovery rate. So if you can see from financial year 19 to financial year 21, the recovery rate dropped from 11.58% to 11.48% to 10.36%, and this was mainly due to the divergence of sugarcane towards B heavy molasses. So I believe that you have understood that all in all, the company is highly dependent on the ethanol rollout and its focus on becoming more of an energy company. To conclude, I can say that this stock might not be like an instant sweetener to your portfolio. It can be only and only for patient investors. So I hope you have enjoyed the entire analysis of this stock. But if you want to know about analysis of few other stocks like ICICI Bank, you can click here. And if you want to know more about top 2 stocks under 1000, you can click here. Till then, take care. Jai Hind and bye-bye.